Hi, you're watching Wall Street Confidential, and I'm talking with Jim Cramer. Jim,
Yeah.
what would change your buying levels at this point?
Okay, let's just reiterate where I am.
Okay.
I had made a downside target of 8,400. We exceeded that this morning. And the
Right.
downside target was made when the Dow was at 11,000. So it's obviously that I wasn't bearish enough. So now we revert to two different scenarios. One is 29 to 32, and there it's that's just all bets are off because what happens there is there's just no snapback. And you just go down precipitously over a couple of days. That is the issue of what happens with Morgan Stanley this weekend.
And there's a lot going on with Morgan Stanley.
We have
right
to
now.
have, if we do not get some closure of the situation of the bleeding financials, then you're going to run a risk of a 29 scenario. Now, let's say that you get closure on Morgan. In other words, the government accelerates when they can do the deal and the Japanese buy it. Unfortunately, the amount of money the Japanese are going to buy it, they can now own 60% of the company. But let's take more, let's say we can take Morgan off the table and we don't get a radical annuity broken contract from an insurer. Both of those have to happen. Then we are going back to an 87 scenario. And remember, 87 we had no bank failure, so it's a real dicey scenario. But in terms of velocity, it works. The snowball. There were two levels that people focus on in 87. They don't focus enough on Tuesday. They focus all on Monday. Monday, if we had a peak to trough Monday that is equal this time, then you're going to come in roughly at Dow 6,600.
Okay.
So we gap down to Dow 6,600, and then we hold because that's the peak to trough from Monday to Monday in 1987. So that's an interesting analog that might work. If you use Terrible Tuesday, intraday, Dow 1400, which is what I counted them to individually myself. People have not used that work, but that's my own work from that period. Then you're talking about Dow 5,990. So you got Dow 6,600, 6,700 using a Monday close in 87, and a Dow under 6,000 using a Tuesday close. So what you would do in those two scenarios was that you would buy the first gap down Monday, but you cannot buy it all because of the potential for a gap down Tuesday. So if you've been listening to me where I said sell 20%, and then I said basically sell almost everything if you needed the money for 5 years. Right. You have only one choice here. You must be buying Monday and Tuesday.
And what would you buy?
Well, I would be buying consumer staples that have now been that yield more than 4, because interest rates are going to go through the floor. I would buy oil companies that are through the floor. We've now hit my downside oil target of 80. I don't want to redo that downside target yet because there's still fundamental demand at that level. And you would be buying utilities that you knew people had to pay, Duke Energy. And then I think you'd be buying companies that do incredibly well in stress, Walmart.
Walmart.
Yeah.
And I think you mentioned McDonald's too.
McDonald's works too.
Great.
Because there, on my downside, you'd be at 47, 48 with a 4% yield. And I think that you're going to want to be very yield hungry because interest rates are going to go through the floor. And the only yields that you're going to get that are safe are common stock yields. Because a lot of corporate bonds might be under distress that we don't know about. Because what is a corporate bond other than debt? See, we don't want any debt. Okay?
But we want to shop for some yield.
Yeah, you want to look at yield.
Thank you, Jim. Deborah here. Stay tuned for more at thestreet.com TV.